Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're tackling a question that seems to be on a lot of your minds. American Resources Corporation, or ARE, is now, a good time to buy.
It's a really interesting one. A lot going on with this company.
Definitely. We've got a stack of research, analysis, filings. We're going to break it all down, look at the financials, market moves, risks, the whole picture.
Yeah, try to piece it together.
Before we jump in, just a quick reminder, if you find this analysis helpful, please do subscribe, maybe give us a like, and definitely leave a comment.
Your engagement really does help us out.
It does. And if you're feeling generous, you can always buy us a coffee. The link's below. Oh, and if there's a specific company you want us to look into next time,
Just drop it in the comments. We love getting suggestions.
we really do. Okay, let's get into American Resources. We'll cover the fundamentals, valuation, the technical chart picture, and what the latest news and sentiment are telling us.
And it's worth remembering the context here. This is the critical raw material sector coal, yes, but also, importantly, rare earth elements.
Right, the stuff needed for basically everything modern.
Exactly. Global infrastructure, electrification, EVs.
Yeah.
It's all tied in. So the potential is there. But as we'll see, the picture for AREC specifically is, well, complex.
Okay, let's start with the foundation then,
Yeah.
the fundamentals.
Right.
How's the company's financial health looking? What are revenues and earnings telling us?
Well, historically, American Resources supplying these raw materials, their revenues have kind of fluctuated.
Up and down.
Yeah, periods of growth, periods of contraction. But the real standout for me looking through the filings is the lack of consistent profitability.
Ah,
Profit margins have often been, really thin, sometimes even negative, and we haven't seen any strong guidance pointing towards robust future earnings growth.
so very sensitive to prices.
Extremely sensitive to commodity price swings, which raises a big question, right?
Yeah.
How does a company really thrive long-term with that kind of volatility and without a clear path to steady profits?
That definitely paints a picture. So with revenues bouncing around and thin margins, what about the balance sheet? Does that look any stronger? Are they financially healthy?
Well, connecting that inconsistency to the balance sheet, it shows a history of pretty significant leverage.
Meaning lots of debt.
Yeah, debt often outweighing their cash balance. Not exactly what you'd call a fortress. Now, they did manage to fix that Nasdaq listing deficiency.
Right, staying above the $1 minimum bid price.
Exactly. They stayed above $1 for, I think it was 12 consecutive days, which was crucial. So that shows some, let's say, short-term stability in terms of regulatory compliance.
Okay, so they dodged that bullet.
They did. But the latest annual filings don't really show any dramatic improvement in free cash flow or big debt reduction plans. So the underlying leverage seems to still be a key characteristic.
Okay. So maybe not a fortress, like you said. What about their actual position in the market? They're this critical mineral space.
Yeah.
How competitive are they?
The focus is definitely, right, essential minerals, rare earths, crucial for infrastructure, EVs. That's a growth area.
For sure.
But it's a really capital-intensive and, frankly, competitive sector. American Resources talks about environmental initiatives, restructuring, trying to be leaner.
Trying to stand out.
Kind of. But they're not a dominant player, not by a long shot. You've got large, established companies already there.
And big guys.
Yeah, the incumbents pose really strong competition. It makes it tough for a company like AREC to carve out a big, sustainable market share. It's a challenge.
Okay, so fundamentals suggest an uphill battle in a promising but tough field. Given that, let's shift to valuation. How does the market price AREC compared to others? What do the ratios show?
Right, so looking at the standard metrics, price to earnings, price to sales, price to book, they generally look higher or, let's say, less favorable for American Resources compared to more established players.
Why is that?
It's largely down to those weak earnings we talked about, or sometimes no earnings at all, and a relatively small equity cushion. So the ratios can look inflated.
Meaning it doesn't look cheap relative to peers.
Exactly. It suggests the market has some skepticism baked in about their ability to generate consistent profits. It doesn't screen as undervalued on those metrics.
Got it. And what about a deeper dive, like a discounted cash flow or DCF analysis? Has anything like that been published?
We haven't seen any detailed DCF analysis in recent company materials or the third-party research summaries we looked at.
Hmm.
And sometimes the lack of one for a smaller, more speculative company tells its own story. Future cash flows might just be too uncertain to model reliably. So overall, based on relative valuation, AREC appears to trade at a premium to sector averages on most traditional metrics.
Which highlights the risk.
Yeah, it underscores the risk profile and its somewhat speculative nature rather than pointing to some hidden bargain.
Okay, fundamentals shaky, valuation not screaming buy. Let's switch to the technicals.
Hmm?
What's the recent price action been like for AREC? What are the charts saying?
Well, volatile is the word. As of late August 2025, the share price has definitely seen some swings. It recently popped up above $1.25.
Okay.
But that move was followed pretty quickly by an insider selling event, which we can talk more about. Crucially, though, remember that period where it stayed above $1 for 12 straight days?
Yeah, to keep the Nasdaq listing.
Exactly. That action strongly suggests that the $1 mark is a key support level, both psychologically and technically.
So watch out if it drops below that.
Precisely. On the upside, resistance seems likely near the $1.30 to $1.40 range. That's based on recent peaks where it stalled and also where some selling kicked in.
Makes sense. And what about momentum? Is there a clear trend or is it just bouncing around?
Momentum has been, well, mixed. You had the rally to regain compliance, which was positive sentiment-wise.
Right.
But then you have that insider sale at $1.26, which could act as a cap or signal a potential short-term top. People might see that and think, maybe that's a good price to get out.
So conflicting signals.
Pretty much. We don't have explicit data here on things like moving averages or RSI, but the high implied volatility suggests the market expects big swings, and the overall trend direction feels uncertain. Not a clear path right now.
Okay, shifting again, let's talk recent news and sentiment. What have been the key developments impacting American resources? And what are the analysts saying?
The biggest piece of news recently was definitely Nasdaq confirming, back in July 2025, that AREC had regained full compliance with the minimum bid price rule.
Taking that delisting risk off the table, at least for now.
Exactly. That was significant. Beyond that, honestly, there haven't been major earnings surprises, big M&A news, or anything truly company-defining hitting the wires lately.
Quiet on that front.
Yeah, and while you do have analyst coverage from firms like H.C. Wainwright, Roth Capital, DeBoral Capital, the public disclosures haven't really highlighted any strong consensus upgrades or downgrades recently.
So analysts are kind of neutral or just watching?
Seems like a wait-and-see stance.
Right.
Which, for a company like this, often translates to caution. No strong conviction either way being widely reported.
Interesting. That compliance issue is definitely a big overhang. What about activity from insiders, people closest to the company, and general market buzz?
Right, this is important. How do the key stakeholders see things? Well, there was a pretty notable event, an insider, Golden Properties. They're listed as a director and a major shareholder.
Yeah, go.
They disposed of 1 million shares, 1,000 shares at $1.26 each.
Wow, that's a big sale.
It is. And the market often perceives that kind of move as, well, maybe a lack of confidence in the near-term upside, or at least that holder thought $1.26 was a good level to reduce their position significantly.
Yeah, that sends a message.
It can. As for broader sentiment, like on social media or among retail investors, the disclosures we reviewed didn't really detail that, so it's hard to get a firm read on the general buzz.
So, a mixed bag. Potential in the sector, but financial challenges, valuation concerns, and some cautious insider signals. What could actually move the stock price? Are there potential catalysts ahead?
Yeah, looking ahead. Short term, you'd watch for upcoming quarterly earnings releases. Any surprise there, positive or negative, could cause a jump.
Standard catalyst.
Right. Also, any updates on their rare earth processing tech initiatives, breakthroughs, partnerships, that kind of thing could spark interest. And, given their focus, any new regulatory news about supporting domestic mineral supply chains could be a tailwind.
And longer term.
Longer term is more speculative, naturally. Things like successfully scaling up and commercializing their critical mineral operations, favorable government policies becoming reality, not just talk. Maybe even sector consolidation, could they get bought out?
Possible but uncertain.
Very uncertain. Those are more distant possibilities, not things you can bank on right now.
Okay, so potential catalysts exist, but many are uncertain. Now, the flip side, the risks. What are the big red flags investors need to consider with American resources?
And the risks are pretty substantial here. If we connect it all, stock-specific risks include the high leverage we talked about, the history of operational losses.
Making it hard to generate cash.
Exactly. There's also dilution risk. If they need cash, they might issue more stock, which can hurt existing shareholders. That recent insider selling is another point of caution. And of course, their heavy dependence on volatile commodity prices.
That's the regulatory angle.
Yes, that reliance on meeting requirements, like the Nasdaq bid price issue showed, adds another layer of uncertainty. Then you have broader market risks.
Like the economy.
Yeah, macroeconomic swings, continued commodity price volatility driven by global factors, shifts in energy policy or infrastructure spending, and that intense competition we mentioned. It's a lot to navigate.
Definitely a complex picture. Okay, we've gone through fundamentals, valuation, technicals, news, catalysts, risks. Let's try to synthesize this. What's the overall verdict from our sources on American Resources right now?
So pulling it all together, the sources we analyzed assign American Resources an overall rating of 3 out of 10.
Oof, that's quite low.
It is, and the reasoning points directly to those significant financial and operational risks, the lack of consistent profits, and the recent insider selling, all suggesting limited near-term upside potential.
Even with the rare earth angle.
Even with that, while the strategic focus on rare earths is definitely notable and positions them in a potentially crucial sector for the future, the company, as it stands today, is viewed as a high-risk play.
Compared to others in the space.
Yeah, compared to more established sector leaders or even other small-cap companies that might have clearer paths to profit or stronger balance sheets, it's definitely speculative.
So if someone is considering investing, what kind of time frame does this analysis suggest? Is it a buy and hold or something else?
Based on this analysis, American Resources looks more suited for speculative short-term trades, for investors who are comfortable with very high volatility.
Trying to time news or catalysts.
Potentially, yes. But it's not seen as a compelling long-term investment right now. The uncertain fundamentals, the debt, the lack of a clear, sustained competitive edge.
It doesn't add up for the long haul.
The current setup just doesn't seem to offer a strong risk-reward balance for typical long-term investors seeking steady growth. It requires constant watching and a very high-risk tolerance.
That's a really thorough breakdown of American Resources.
Yeah.
It's such a good reminder, isn't it? Even if a sector like critical materials sounds incredibly promising.
The specific company matters immensely.
Absolutely. The individual company's financial health, its market position, management actions, those details are paramount. You can't just buy the theme.
And it brings up that key question for any investment, really. How much weight do you give the promise of the sector versus the sometimes harsh realities of the company's current operations and finances?
Always a balancing act.
It truly is. Every investor has to weigh that for themselves.
Well said. And understanding these details, these nuances, that's what helps you make informed decisions that fit your own strategy and risk profile. We really hope this analysis gave you some valuable insights into AREC.
Hope it was helpful.
Thank you so much for joining us on Investing Talk Podcast. Please don't forget to subscribe, like us, and leave a comment. Let us know what you thought, or suggest another company for us to look at.
We'll see you next time.
Until then, keep learning and investing wisely.